All right, in this video, I'm going to walk through the electric vehicle tax credit. And there's going to be like two pieces to this, like pre-Inflation Reduction Act and then post. And then I'm going to show you an example on a personal return, how this credit impacts this couple and how valuable this tax credit is. So to kind of get started, you got the electric vehicle tax credit. So pre-Inflation Reduction Act, which came into law on August 16th. So if you bought a electric vehicle on January 1st of 2022, and before this date, and you got the vehicle, your max credit is going to be $7,500, and the credit starts at $2,500. There are manufacturer credit limits, which I'll show you shortly. This has a big impact comparing 2022 to 2023, and the vehicle that you buy is not to be used for resale. So that's, pre-Inflation Reduction Act. Now, just say you sign an agreement to buy one of these electric vehicles on March of 2022, but you never got the vehicle until October 31st of 2022. You follow this, the older rules here. Now, what if you bought a vehicle post August 16th, and you got the vehicle, and this is before December 31st, 2022, so before the end of the year, you follow the old rules here. Now, this manufacturer's credit limit, I'm going to show you this website. The website, and I'll put it in the show notes. It's afdc.energy.gov. And what it shows is, and you actually can type in your VIN number to see if you qualify, but it shows the model year of all these electric vehicles. And then the third column here shows manufacturer sales cap. And what that means is this manufacturer on this vehicle has reached the volume limit. So all the credits have been used. So if you bought this vehicle, you probably won't be able to get this credit. Now in 2023, which I'll go back shortly, this kind of goes away. So this doesn't play into the picture, which is a good thing. So anyways, you can kind of look through all the different vehicles here, because some of these vehicles, you may think it's an electric vehicle or you may qualify, but if it's not on the list here, most likely you won't be able to qualify for it. So that's pre-Inflation Reduction Act. Now let's jump to tax planning for next year, right? It's January 1st, 2023. You want to get an electric vehicle. So the max credit, $7,500. There's two rules. I'm not going to get into the details. One has to deal with critical minerals. The next one has to do with battery components. You have to meet both to get the max credit. If you meet only one of them, the credit's $3,750. And then all vehicles has to be final assembly has to be in the US for these purchases. I talked about this manufacturer sales credit limitation. It's going to get removed here in 2023. Next points, so the dollar value, right? So you're going to go buy this vehicle, this electric vehicle. For a sedan, it's got to be under $55,000. If it's a van, SUV, pickup, it's got to be under $80,000. Now, here's the big difference here is adjusted gross income. So if your adjusted gross income and your married filed joint is above this amount, $300,000, if you buy this vehicle and you meet all the other requirements, unfortunately, you can't get the credit. Same if you're filing single, if it's above this amount, same thing, you can't get the credit. So that's a big determination here. And then they also added in used electric vehicles. So you can buy a used one, it's got to be greater than 2 years old. And the credit is lesser of $4,000 or 30% of the sale price. And then this credit is not refundable. And I'll show you this in the tax return example. Now, the real planner here, if you're really looking forward, is in 2024. Just say you go to a dealer, you buy an electric vehicle, you meet all the requirements, you can trade that credit to the dealer and they'll give you a discount on your vehicle right on the spot. So you don't have to worry about filing this credit on your tax return. So just say your vehicle was, $60,000, actually, $50,000, right? The dealer is going to reduce that by the credit, and then you're going to give the credit to the dealer. So that's a faster way to kind of get this benefit. So again, another tax planning idea. And I'm sure there's going to be a lot, better vehicles coming out in 2 years from now. So let's go to our example here with Ferris and Sloan. And again, the 2022 tax returns have not come out, so I'm still kind of using 2021. Their AGI is 404,000. So you look at this, by looking at this, they do not qualify. So if they buy an electric vehicle, and this is 2023, they would not qualify to get the credit because of that AGI limit. They would have to be under 300,000. So we go down to the bottom line here, and they owe $35,000. So they go out in 2022 and they are going to go buy electric vehicle, and it meets all their requirements. So we're going to say the credit, they're going to get the max credit here, right? So instead of owing $35,000, they're going to owe essentially $35,000 less $7,500, and that's $27,000. Okay, so and that's why a credit is a lot beneficial than a deduction. Not like deductions are bad, but a credit reduces the tax that you owe the IRS and the state. Now, just imagine if, or just kind of let's change the rules here and just say Ferris and Sloan, they owe the IRS $5,000. Okay, they buy this vehicle, it's $7,500. They can only get a credit up to that $5,000. So now they don't owe anything to the IRS because there's that non-refundable limit there. And this is starting in 2023. So it's $5,000 they owe the IRS. They get the full credit, but it stops once their tax liability goes to zero. So that's what non-refundable means. You can't get a refund off of this credit. So hopefully this helps. If you have any questions, let me know, and just post the questions in the feed and I'll try to get back to you. Thanks.